Hey everyone, and thanks for jumping back into the cryptoverse. This is the weekly premium video. We're going to go through some of the new charts we've added to the website, and I wanted to sort of explain why they're there and how they could theoretically be useful as we continue to navigate the market cycle. And then I would also like to say that, if you, as we build out this website and whatnot, if you have suggestions as to what charts you would like to see added, we already put this on Telegram and we're going through those as well. But if you have certain charts you'd like to see on the website, whatever it is, right, just put it in the comments down below, and then we'll be continuing to add to this over time. Okay, so you're basically just going to see us completely just continue to build this stuff out. I mean, time is on our side, right? I mean, we're just going to keep on building it out and making hopefully the experience even better. So if you're new, then go head on over to app.intothecryptoverse.com and you're going to have to log in. And once you log in, you can go over to the charts tab. Okay, and it's going to take you over here. And again, you can switch this to light mode or dark mode. I have no idea why anyone would not want to do dark mode. But if you switch it over to dark mode, you can see all the charts we have, right? We have the total crypto market cap and trend line, the overvaluation and undervaluation of that. You guys have seen this with the Bitcoin Beauty of Mathematics series that we talk about a lot. We also have the ROI charts. And again, this is the one where we are essentially looking at, okay, well, we expect the cycle to lengthen, and now it's just a matter of, okay, well, how much is it going to lengthen by? Technically, the market cycle has lengthened from the halving, but it has not yet lengthened from the market cycle bottom, right? And in order to do that, we still need to put in a new all-time high. Technically, I would say we're unofficially lengthened by 3 days or 4 days, but until we actually put in a new all-time high, we cannot claim that the cycle has lengthened from the market cycle bottom, okay? So you can see all these charts, right? There's the ROI from the halving. This is really useful for people who don't have TradingView, right? And we have these charts on TradingView, as you guys know. If you head on over to TradingView, and you have to go over to the daily time frame, and if you click on, say, if you pull up your halving cycles indicator by going over to indicators, invite only scripts, you can find halving cycles, and it sort of takes a little bit of time to load because it's pulling in data. But let me click back on it. One of the things is, like, if you would prefer to see it on TradingView, you can see it right here. Some people don't really like TradingView, right? Some people don't really like it, and so I think you can also access it over here pretty seamlessly. Okay. Now, in addition to that, we have the logarithmic regression charts that we've talked about before for Bitcoin. We have them for Ethereum, but most recently we've added some on-chain stuff, and we're going to be continuing to add some on-chain stuff. The whole idea is to make it so that you can access a ton of information from this website. Like you can go there, you can see what the markets are doing. We're going to try to expand this as much as we can. But I think a lot of these different charts just provide more insight, right? They provide more insight into the market than if you only had the risk levels or if you only had the regression bands. But if we take everything together, then theoretically, at some point in the future, we can hopefully better identify a local top or a market cycle top. I mean, I think the risk levels are going to be, fairly instrumental in doing that. But again, if you see, a lot of confluence among a lot of different indicators, then it makes it even easier to identify those things. So for instance, I mean, if you go, say, to the number of unique addresses used, total amount of unique addresses used on a daily basis, it's an interesting indicator. And I mean, you can see sort of the spike we had in 2017. You can see the spike we had back in April of 2021. And we're not having that spike yet. I mean, it's slowly trending up, but again, it was slowly trending up over here in 2019. Not one of the major spikes in 2017. This was a parabolic blow off top. This was a longer distribution phase earlier in the year. So I think having these indicators will sort of expand our outlook on the market. You can also look at things like the miner revenue, okay, total amount of Coinbase block rewards and transaction fees paid to the miners. So I do believe that that having all this stuff will sort of make the experience even better. I think I accidentally zoomed in there, but it should generally make the experience better as we continue to add things. So again, I need your help in figuring out, okay, what other charts do you guys want to see? Of course, we're going to keep adding them as we see fit, but if there's something you would really like to see, then we can go at it, right? We can go at it. So the other two, just so you guys see that we have the hash rate. And again, this is all of these you can switch them over to, or a lot of them you should be able to switch it over to a log scale as well. So if you want to view it on a log scale, you can do that. But I think for some of them, they actually look a little bit more interesting on the linear scale. This is when with the China when China sort of banned the miners and whatnot, we also saw a huge decrease in the hash rate in addition to the drop by Bitcoin, and now we're slowly climbing back to new all-time highs. Right, we're slowly climbing back, which I think is pretty bullish over the long term. Right, we want to see this continue moving higher. And then the other one I don't think I clicked on yet is the transaction fees. Okay, and this is one back in 2017 we can see that it spiked right near the top. Right, we saw that spike. We also saw the spike here as well. Okay, so what's one more indicator to have? Right, I don't feel like you can have too many, but I think that by adding all of these, hopefully it provides some value. So I wanted to do a video on this because I don't think a lot of people know about it. If you're not in the Telegram group, which some of you are not, you might have no idea that this even exists. If you haven't really looked up here to see charts. Okay, so make sure you go to app.intothecryptoverse.com and we're going to continue to explore all these different charts and whatnot. And let me go back to the main page. We're going to continue to explore adding all these charts. We're also going to be adding some other things as well besides charts. Okay, I think it'll be interesting to expand into, say, how your different altcoins are say faring against Ethereum and whatnot and Bitcoin, to get a quick idea of, all right, well, how's it performing? Is it worth the risk or not? Should it can give you insight into whether you should consolidate that position back into Ethereum or back into Bitcoin if it's just continuing to underperform. Okay, so hopefully you guys find the value in the charts we're adding. You can just go to, again, app.intothecryptoverse.com. You can find that stuff. And again, if you're new to this stuff, you can find all these other links as well on the page. Now, the risk levels for a lot of these different cryptocurrencies, of course, have changed since last week. We know that Bitcoin is now below 0.5 risk. It's currently at 0.485 risk. Therefore, for me, this just means another week where 60% of my weekly DCA is just going to go to Bitcoin, 30% to ETH, 10% to altcoins. Okay, and for me, 10% this week. Again, it's just going to be, and you can look at it over here too, of course, right? It's just going to be going to Polkadot, and you can even see Polkadot's below 0.5 risk now. So, hopefully that makes sense. And Matic, I do think Matic is another good one. I mean, its risk is relatively low right now, 0.364. And I've spoken about some other cryptocurrencies, but at the current time, the other main one that I mentioned was Aave, and our thesis on it is, look, like if it shows any signs of stopping the bleed against Ethereum, then it might be worth it. But look, I mean, so far it's not stopped. It has not stopped yet. And I know, you could make the claim, well, it could theoretically be a double bottom. It could, or it could just be bleeding, and we don't know that yet. And so for me, I would like to see it turn around before I would DCA into this, because it just makes sense for me to DCA into ETH, especially if this is just going to keep bleeding against Ethereum, right? I mean, that's the whole idea. And so, I mean, if you go, of course, Avalanche is of course the talk of the week, right? I mean, this is one of the ones we introduced this one on the channel when it was trading around $12. So I guess it's now officially up 10x, $134, right? I mean, it just simply does not care about the rest of the market right now. It's doing its own thing. Again, if you want my input on it, my AVAX is locked until May, right? My AVAX is locked until May. I can't do anything with it. If you want to take profits, you can. But the way you read it, right, is you typically take profits to the highest risk, because that means the inverse of it would be like, say, your ETH, if AVAX Bitcoin risk is 0.997, then that means the Bitcoin AVAX risk, the reverse, would just be 0.003. Okay, so you take it to the highest. If you want to offset risk theoretically, then that would mean taking it to ETH. Of course, risk levels on these are somewhat immature. You could easily argue that just letting it ride could also make a lot of sense. Because remember, Solana, we saw triple ones at one point, And right when Solana hit triple ones, it had a fairly substantial pullback from like, 220, 212. I think on the premium list, I think we actually caught the top on the premium list. Like I think I was watching it on the weekly video. We looked at the risk dashboard. It was triple ones, and then the next day is when it crashed back down. But look, I mean, AVAX risk right now, it's not at triple ones. It's more or less at double ones, right? Risk against Bitcoin's one, risk against ETH is one, risk against the US dollar is 0.691. So I mean, theoretically, for it to get to one, we need to go over it would need to go over $300. Now, I'm not saying it's going to get there, but if it were to make it there, I think it would make it even more sensible to take some profits if you're looking to offset some of that risk. Again, for me, my AVAX is locked up until May of 2022, so I'm not doing anything with it. But if you do have a large position in it, look, it has gone parabolic. It's still doing pretty well, right? If you go look at, say, the short-term bubble risk on it, it's about as extended as it was, back in September. But even after that, it more or less just moved sideways until the bull market support band caught up to it. I would say that, in terms of dealing with, say, like short-term capital gains, I hate dealing with short-term capital gains. So if you're in long term, and especially if it does something like this, then that could be a different story, right? If it continues to move up and goes to, say, triple ones on the risk dashboard, where the risk against Bitcoin, Ethereum, and the US dollar is one, which essentially means it's probably doing something like that, where it gets too parabolic, too extended from the 20-week moving average, then I think it might make more sense to skim some profits. But at this stage of the cycle, because I generally think that the market cycle is going to extend on for a while, I don't think it makes sense to liquidate the entirety of any of these positions, just because, some of them are going to pop occasionally, and then they might consolidate for a while, but that doesn't mean they're completely done for the cycle. It might just mean they're done for a couple months or something, and then they'll continue on later. But I think the best way to gauge that is based on what Bitcoin's doing. And right now, Bitcoin's trading for 57.7K. I do fully expect Bitcoin to ultimately make it to higher prices this market cycle. So I would argue that time is on our side. For me, I'm still happy that I'm just letting my AVAX run, and also I'm earning rewards on it. Again, you can stake your AVAX into the Cryptoverse stake pool. And if you don't know how to do so, just head on over to the staking website, right? You just go to the staking website, staking.intothecryptoverse.com, and you can find information on how to do that, all right? So, if we go over to Bitcoin, obviously I know we did not get the close below the 20-week or below the 8-week moving, or we had a close below the 8-week moving average. We did not, in fact, close above it. Historically speaking, there's a decent chance we test the bull market support band. It hasn't happened every time, technically, as I pointed out in a video recently. There was a time here we dropped below the 8-week, and we sort of just nestled up right below the 8-week for about a month without technically testing the bull market support band. But look, as I said, I think this market makes a lot more sense if you don't constrain the market cycle peak to be by the end of the year. If you constrain it to be by the end of the year, then you basically have been fighting this battle for the last several months, where you keep thinking it has to go up to like 80K in a week or something, and it just keeps not doing that. And so, the idea that Bitcoin's going to go to $200,000 in the next 5 weeks, I know there are a lot of people out there that are expecting that. It is somewhat absurd to think that. But if you look at the market and say, yeah, maybe it doesn't have to end in 2021, which is what we've been saying all along, then it makes a lot more sense, right? Of course, then it does make a lot more sense. So, again, the bull market support band today is ranging from 51K more or less to 53K. That's where we would like to hold the line in the event of a dump. No guarantee we go to those levels, but look, that is where we would like to hold the line. If we don't hold the line, then what would happen is alts would bleed against Bitcoin, right? Alts would bleed against Bitcoin. But we held the line here back in September. I would hope that if we test it again, we should be able to hold the line, or at least we have a much higher probability of holding the line than we had earlier this year back in May. And the reason we say that is, look, if you look to see what happened back in May of 2021, we got too far extended from the 20-week moving average, and then we were unable to hold it as support. But this time, we didn't really get that far extended, so it seems like there's a higher probability we could hold it as support. Something akin to 2017. Remember, 2017 had these types of movements, where rather than getting too far extended, we just kept going back down and holding it as support, like this, right? And then ultimately, at some point, we had that blow off top, which then we were unable to hold it as support at that point, and that ushered in the start of the bear market. So that would be, I mean, I would actually quite enjoy if we did something like that, where like similar to 2017, if we were to say just continue to go back down and then ultimately to stay above it. But look, there's no guarantee we test it. Keep an eye on the 8 week. It's now at 60.5K. If we get back above that in the next couple of days, we could still be off to the races. But I would say keep your expectations in the short term grounded, because we always know that getting below the 8 week, we could go back down and test the 20 week. There is an example here back in May. We got below the 8 week and we actually got back above it before going back and testing it. But if you guys remember back in May, back in April when we broke below the 8 week, I said back then, look, it's typically only a matter of time before we test it. Now in the short term, we actually got back above it, and then people were saying, well, we didn't test it, but look, it usually does mean we do. I guess there's not a 100% success rate on that. Again, this is an example of almost testing it, but we still got within a few percentage points of actually testing the bull market support band back over here when we dropped below the 8 week moving average. So, look, market still looks relatively good to me. I look at this and say, we got higher highs, we got higher lows, we got the bull market support band moving up, we got the 50-week moving up, and I think the market looks relatively bullish. If we go back and look at this pattern we looked at in the past and then just shift it over, this is still more or less what we saw, right, in the past. If we put it up here, you can see we got there a little bit early, right, at these prices. We got there a little bit early. Maybe we just go sideways into it. If you shift this over to, say, that capitulation, right, then it actually does line up a little bit better here, right? I mean, you can see this move, and then this move to the peak lines up a little bit better, and then we're sort of right on where we would be, if we follow that move more or less to the T, right? Albeit a slightly diminished version of it. Okay, so I look at this market and say, it looks relatively bullish. I would argue that as long as Bitcoin and Ethereum are below 0.5 risk, they should constitute the majority of one's DCA on a weekly basis, on a monthly basis, whatever it is. As long as they're below 0.5 risk, they are the blue chips. If you want to take on more risk, you can do so, right? You can certainly do so. Just recognize the risk you're taking on. As long as you're okay with that, then I hope you make more money, right? I mean, I hope you make more money than I do taking on less risk. So yeah, I mean, that's more or less what I see in the market, right? I mean, so again, if you want to know what I'm DCing this week, mostly Bitcoin, Ethereum, and Polkadot. I'll pick up a little bit of Matic as well. I think Matic I think it's still undervalued relative to a lot of the other altcoins. I also think Polkadot's undervalued. I also think Link is undervalued, right? But I mean, we're growing old saying that. And so until, as I've said for the last couple of months, I still have my Link position. I know some of you guys have liquidated it and it's worked out well for you. Until Link stops bleeding against Ethereum, I'm not going to put more money into it. I haven't sold my position, but I'm not going to put more money into it until the bleed stops. Okay, so I know people keep asking me, "Are you buying Link yet?" No, like until the bleed stops, I just think the opportunity cost is too high. Like it's just simply too high to not just put those dollars into Ethereum until Link proves it can do something other than bleed against Ethereum. I mean, I think it will one day, but that day could still be 6 months away for all we know. Right? It could still be a ways off. So let's pull up Polkadot really quick. Polkadot is it's still above the bull market support band, which now ranges from $32 to $33. I'd say we're looking pretty good there. We held support at the 21 week EMA. I'm still extremely bullish on Polkadot for the market cycle. I know it's running kind of slow, but look, a year ago it was trading between $3 to $6. Now 30 to 60 is more or less the range, in my opinion. I think we're gonna look, in the future we're gonna look back on this time and sort of reminisce when it was these prices. And who knows, maybe the next bear market will bring us back to these prices. But I would say that over the macro scale, we should be able to continue trending higher this market cycle for Polkadot. All right. Let's also go check in on ADA. Okay, so we'll go check in on ADA as well. We've reached that window where I generally think ADA could have a breakout to the upside, but again, it does extend until late March, We'll see what happens. It's currently trading for 179, 180. My general thinking on it again is that we need to get that Pluto's backend up and deployed, get people launching their own dApps and whatnot. That seeing that ecosystem thrive would certainly bring utility to the space. Until that happens, or at least until the anticipation of that is actually happening, then we're still humdrum for a little while. Okay, so again, earn interest, right? Earn rewards. You can stake it within the cryptoverse if you want. We do have the Sunday. We did get selected for the Sunday Swap ISO. So if you are staking within the cryptoverse, ITC or ITC2, then I'll keep you guys updated on that whenever they do the ISO there. But until then, I think it's until we get a little bit more development on Cardano's ecosystem, we're still sitting a little bit humdrum for a little while. Okay. Obviously, again, the hot topic for now is Avalanche. It does really show you the utility of having a slightly diversified portfolio of your top coins because, Bitcoin's not really doing a whole lot right now. Link isn't doing much of anything. DOT's doing okay. ADA's been bleeding the last couple of months. ETH has been doing relatively well, and AVAX has been doing extremely well. So it's always nice when you have a couple of them that are really outperforming and doing pretty well. Sort of helps you get through the phases where the market dips back down. Because again, the market's dipping today, and Avalanche just simply does not care. It simply does not care. So remember, leave a note down below on ideas for charts. I'm not asking you to come up with every chart because we're going to be putting up charts regardless of what all the suggestions are. But maybe you have a suggestion that we haven't thought of, and if you do, then we could try incorporating that. The whole idea is to bring more value to you, and if there's something you're wanting to see, and we can easily throw it up, then it makes sense for us to do that if you're going to get value out of it. Okay, so there you have it. Right, go look at the charts. Let me know what you guys think if you haven't looked at them already. And we'll be reviewing the comments down below. We'll probably compile them and then figure out, okay, what charts are we going to add. And then also, with regards to the layout of all this stuff, we're going to be working on that as well over time, trying to optimize it, make things a little bit better. So I understand some people have some comments or questions about that. That should only get better as we continue on. Thank you guys for tuning in. Another standard week in the cryptoverse. Bitcoin's 10, 12%, 15% above the 20-week SMA. I guess I could actually go check it out before telling you guys something. So we're currently, the 20-week SMA is currently right around here. So Bitcoin's about 13, 14% above the 20-week moving average. So we got some wiggle room, of course. We might not test it. We do have some wiggle room, but I think this is going to be what we're going to be watching this week. Do we test it? And if we do we hold it and then trend higher, or do we quickly get back above the 8-week and continue along our merry way? Thank you guys for tuning in. If you have any questions, comments, or concerns, put them down below in the comments section. See you guys next time. Bye.